Zero DTE SPX options are making waves. Some traders swear they're the quickest way to make money. Others, well, they've got a little bit of a different opinion. They swear they're the quickest way to lose money. In this video, we're going to unpack exactly what zero DTE options really are. We're going to weigh the pros and cons and tackle the question, can you really make money consistently? I mean, 3 to 5 days out of the week. Because if you can, well, you can print money, right? Stick around as we'll uncover what it takes to get an edge in this high-speed game. You might be surprised. We'll separate the hype from reality and help you decide if this approach deserves a place in your trading playbook. Should be a fun video for you here today. I appreciate you for being here. One thing I need, one thing only, smash that like button. That's all I need. If you want to subscribe, you can certainly do that. We're at all-time highs for subscribers, and I appreciate every single one of you for being here today. Okay, what are zero DTE options? Zero DTE options, or 0 days to expiration options, are contracts that expire the same day they're traded, giving traders just hours to profit from rapid price moves. These are typically used by active traders looking to capitalize on short-term volatility or collect premium quickly, often by opening and closing positions within a single trading session. Because of the compressed time frame, zero DTE options are fast-paced, high-risk trades that require close monitoring and quick decision-making. How do you trade zero DTE options? Well, there's lots of ways. I made a video about a year ago, and as of now, it's actually the most viewed video, most popular on my channel. And it showed the strategy I used, and I'll link to it at the end of this video. And yeah, I was killing it. Let's break down the pros and cons of zero DTE options. Quick turnaround. Zero DTE options allow traders to capitalize on same-day price movements and avoid overnight risk, making them appealing for those seeking fast results. They also have lower premiums because there's almost no time value left. These options are often cheaper to buy than those with longer expirations, enabling higher leverage and less capital outlay. The high leverage is also a pro. The low cost means traders can control a larger notional value with a smaller investment, amplifying potential gains if the trade moves in their favor. And they're flexible. Traders can open and close positions within the same session, providing flexibility and efficient use of capital. Now let's cover the cons. High risk and volatility. The short time frame means even small market moves can cause large swings in option value, making these contracts highly volatile and unpredictable. Rapid time decay. With expirations just hours away, the value of a zero DTE option can erode quickly if the underlying asset doesn't move as expected, often resulting in a total loss of premium paid. They're all or nothing bets. There's little room to adjust or recover from adverse moves. If the underlying doesn't move in your favor, by the end of the day, you lose your entire investment. And there's higher trading costs. Commissions and fees relative to the low premium can eat into profits more significantly than with longer dated options. And it's definitely not for beginners, guys. The fast pace and high stakes make zero DTE options best suited for experienced traders who can manage risk and act pretty quickly. Is there a better way to trade options? Well, let me show you an alternate way to trade options that might be a competing way, or it might be just a good way or a better way. All right, guys, here's another way to trade options and stocks. And we can just go to the Yahoo Finance platform, punch in AMD ticker, and you can go to the summary page right here. This is a banger of a buy right now for me. They've got a target of 127. My target's 200. It's much higher, but it's trading right now at $111. And you can see, here's one factor I look at, the 52-week range from 76 to 187. So it's recently been at 187 within the last year. That's probably somewhere over here. And it was also up at right here at 170 just in October of last year. But there's a lot of good things going for AMD right now. If we now move to the stats page, we can see the forward PE is 28. So 28 versus, you can see in 2024, September, it was 30. It was in June of 2024, it was 47, and then 53 in March of last year. The PEG is 0.58. That's incredible. Way under 1. Under 2 is good. And so to me, AMD is a excellent buy. It's a no-brainer going forward. As far as the analysis, let's look at the earnings. Beat the last 3 quarters. Revenue and earnings growing consistently. The analysts, strong buys and buys. If we go down to the growth rate, this is what's incredible. 43% expected growth next year. So huge value play right now. Let's look at a way that I'm trading this. This is the Tasty Trade option trading platform. There's a link down below. There's benefits if you go through my link. It's super intuitive, a great platform. Here's the income statement for AMD. Increasing revenue and net income every single year. The balance sheet, super strong every single year, increasing. If we go to the trade page now, and we're in table mode, one of my favorite strategies is the leaps option strategy. And it really takes the risk out of the market in the short term because I'm going close to a year out. So if there's a big dip in the market short term, it doesn't really affect my leaps. And I'm going to show you how to profit on the way down when that does happen. So we can, with the strategy I'm going to show you, we can make money in both directions. It's called the poor man's covered call. So we're going to go out to March, open that chain up, and we'll buy the 110 call for 2025. So that's one contract controls 100 shares of stock. So that's $2,025 that we're putting out for this trade. But it controls 100 shares of stock. If we were to buy 100 shares of stock, it would be $111.26. It's moving now. The market's open. But times 100 shares, that's $11,100. We're controlling the same 100 shares for $2,000. So it's 20% discount. Why pay retail, right? Well, we're retail traders, but why pay, why not take an 80% discount and put up only 20%? That's what I'm talking about. So we'll, if we go to the curve mode and then analysis, we can look that just like owning the stock outright, once we recoup our $2,000, it increases just like owning the stock. So if it gets up to 155, we make $2,500. We more than double our money. If it goes to where I think it's going to go in the next year, 200, see how much we make. 200, $7,000. We're up at $7,000 on a $2,000 investment. But that's not the best part. Let's go over here to table mode, close up the March, and I'll sell monthly options against it. So we're already at 21 days. At 15 to 21 days is about when I roll my short calls that I'm playing against my leap. So I'm going to go out to July, and we'll click and open that up, and I will sell the call. I'm going to sell the 34 delta. So that gives us a 66% chance of the stock staying below 120. We're at 111 now. So it gives me a $10 upside to make on the leaps. And I can collect a big $3.50. So that's $350. And you can do that every month. If you do that every month for 10 months, that's $350, or what is that? $3,500. That more than pays. I mean, it takes you 6 months to own this leaps option contract for free. It covers the cost of the leaps. So that's what I love about the poor man's covered call. You can double your money pretty quickly. But what I'll do is I'll go ahead and click on the sell. So calls are on the left, puts are on the right. We'll sell for $350, the 120 strike, and it brings the cost down to $16.60. So from here, we hit review and send and place the trade. I already have this trade on in several accounts multiple times. So for me, it's a no-brainer, but let me know in the comments below what you think. Guys, when it comes to zero DTE options, the market is highly efficient, meaning options generally are perfectly priced and everything is built into that price. So in the short term, it really feels like a coin flip almost. And since everything's constantly changing in real time, the new data comes in and there's really little, if no room to predict or adjust. The real edge in stocks and options comes when you can combine multiple analysis methods. So technical, fundamental, sentiment, or the fear and greed index, and have a more comprehensive view of opportunities and risk in the market rather than relying on a short-term day trade. All right, guys, I really appreciate you being here today. Remember to smash that like button down below. Subscribe if you like. Download the free options workshop in the link below. It talks about the benefits of trading options over buying stocks. Leave a comment. Let me know, are you trading zero DTE options? And what's your success rate? And what strategy are you using? Thanks for watching. I'll see you in the next video.